Hi everyone, welcome to another honeystocks.com weekend analysis. Now, before I do the usual and switch over to my screen share, I think most of you understand by now that I just don't have the time to put out as many analysis videos as I once did. But thankfully, the weather here in Scotland has taken a turn for the worse, so I'm a little bit bored today. So hopefully you get some value from this. Hopefully you get some insight into the technical world that I live in. And if anybody has any questions, thoughts or comments, please do comment below. It does help with the YouTube algorithms and all that stuff. But something that I just want to get out there straight off the bat is that I'm not a day trader. My time horizon is weeks to months. I'm primarily a trend follower. And hopefully, there's levels to this game in technical analysis, and I'm told that whenever I do these videos that they're very, very good. And thank you for all of you that take the time to share on social media, to comment, and those of you that send emails. For those of you that like to send nasty emails because I maybe don't have the same thesis that you do, that's okay as well. Thank you for participating in my work. So let's dive into the charts. Let's see what the market's telling us, and hopefully you get some trade ideas and some charting ideas for the forthcoming week or two. Now, before I dive into the market, as always, please do pause the video. Make sure you're comfortable with that before watching any further. It basically just says that there's not any investment advice, and to listen to absolutely nothing I say. Most of you that follow me on social media already know this. I'm registered with the CMT Association. I'm working my way towards my chartered status for technical analysis, and technical analysis is something that I'm widely known for. And if you get some value from this, please do subscribe to the channel, comment, share it, all the good stuff. Now, as always, before I get into the individual names and the individual charts that I know that many of you look for, what I want to do is just spend, as always, 5 minutes just quickly walking through the broader market, showing you where I think the relative outperformance is possibly about to come from, and evidence backed up with technical analysis. You all know that I don't use the magical hindsight indicator. The market doesn't work like that. But what I would say is, because we are coming into a very heavy earnings season, my thesis on many of these charts could change by Tuesday close of play. So do your own due diligence, and of course make sure that you follow your process and not anybody else's. Now, the S&P 500, of course, we're in a massive uptrend, but what I wanted to highlight is the historic levels where we get market sell-offs. Now, as we can see with the RSI momentum, the RSI is only sitting at around 65 at the moment. Yes, we were sitting up around 74, 75. So we've had a little mini pullback with momentum, and this is something that we like to see with any market uptrend. So for me, the market isn't even close to being overbought. I have no concerns on this whatsoever. As we can see historically, when we start to get above 80 with RSI in the major averages, then that would be a headache for me. At the moment, I consider the market to be in a very healthy uptrend. Yes, there are little breadth indicators that are potentially saying we might get some short-term downside, but the market structure and the path of least resistance is absolutely higher at the moment. Make no mistake about that. The Dow Jones, again, we're very close to pushing up and breaking out again into all-time highs. And as we know, this is a market uptrend. We do not want to be shorting stocks when the market is in a healthy uptrend. That's just common sense. Now we've got the triple Qs. I had a little bit of a headache this week. I think the headache for me was, are we potentially, putting in a failed breakout? Now, I do have some examples of failed breakouts and failed breakdowns in individual names this week. Quite often it's an early warning signal to start to take defensive action. But for me, I wasn't quite there. I'm really looking at the 20 period simple moving average. If we start to break down below those key levels, and the other major averages like the Dow and the S&P start to follow, then of course that's a big problem. At the moment, I'm just not there. I'm very much viewing any dips as a buy opportunity. Many of you will have heard me use the phrase that pullbacks and uptrends oftentimes offer opportunity, and make no mistake about it, the dips are being bought at the moment. Now, there are a few relative charts that I want to touch on. Now, the reason I use relative charts, if you think about your standard portfolio manager, hedge fund manager, these guys and girls are paid to outperform the market. Now, relative charts help us to identify what is outperforming. Now, when we look at something like technology relative to financials, this is a logical level where technology is likely to start to outperform financials. Now, financials, as we all know, over the last few months have been outperforming technology. This is what the chart tells us. So we have reached a level from March 2000, and technical analysis is, I can't explain it, it just works. But we've got this key level from March 2000, and of course we're bouncing from this level. So this tells me that technology is likely to outperform financials provided we're above this level from March 2000 in this ratio. So if you're on the fence about whether to buy technology or buy financials, if you want outperformance, then I think technology. I think that there's a rotation back into technology, and I think that's reflected in the charts. Again, we've got technology relative to the S&P 500. We've put in a failed breakdown, in my opinion, and we are starting to move higher there in this ratio. So that tells me that tech is likely to outperform the S&P 500. Now, that leads me on to some areas that I feel like are potential areas that could, as an ambulance drives past. So we've got the small caps poised to potentially break out. Now, with the small caps, I think most of us understand that many of them have been beaten to death over the last few months. Many of the stocks, individual names, have been cut by 50-60%. Now, the question I have at the moment, and I think it should be an area of focus as well, what happens if the small caps start to participate? Now, this is the thesis that I've had over the last 2 weeks, and the thesis that I've been communicating to our clients. And I think if we start to break out in IWM, I think if IWO, this is the Russell 2000 Growth ETF, IWO, I'm just asking the question, is it time for a rotation back into many of these beaten up names? And for me, and for my process, the technicals are starting to support this. Of course, we know the small caps have massively outperformed technology since September 2020. Again, this is these ratio charts. I don't expect any of you or many of you to have access to these charts. We have to build them, that they're custom builds, and I know many of you are not professional market analysts like I am and have the time to build these out. But we've had a massive outperformance. I think we've had a little bit of a pullback as the small caps have been beaten to death. But I think we're starting to get to an area here where I think small caps might start to outperform something like technology again. So for me, many of the beaten up names are very interesting. And of course, we've still got the intact correlation between the US dollar index and the S&P 500. So when the dollar index is declining, the S&P is rising. So if the dollar index continues to drop, then that would be an environment where stocks are likely to continue higher, in my opinion. Now, that leads me on to individual sectors, and of course I have some individual names as well. Now, a couple of weeks ago I made a call on a bottom on biotechs. Now, that thesis does seem to be playing out at the moment, but what I want to highlight here is that there always has to be a level where we say that our thesis is incorrect. So, if those of you have, bought in on biotechs based on the charts that I maybe put out to social media, etc., when you are, picking bottoms, which I have to say is a mostly losing strategy if you don't have the right conditions for it. But when we get situations where we've got bullish divergences with RSI momentum, when we're not reaching oversold conditions, then that becomes quite appealing to me. So we obviously have to overcome, things like the 50-day moving averages and trend lines. It's a long, slow process to get back to previous highs, but what you do have the ability to do is manage risk. Now, very, very similar with the solar ETFs. Now, if there's any disclosures that I need to make regarding any individual charts or any individual sectors, stocks that I have communicated to our clients over the last week or two, then I will make those disclosures. Now, solar ETF, this was communicated to our clients last week regarding another potential bottoming scenario. Again, that thesis does seem to be playing out at the moment, but we are very, very close to the 50-day simple moving average. As we can see, when we had a market uptrend, the 50 SMA tells us that it's in an uptrend and you just remain bullish above this level. So it's going to be interesting for me to see whether we get a rejection at the 50-day here or whether we blast through it. And solar, again, I think should probably be on the menu. And, many of these names have been beaten down, as we all know. But there is some signs of life there, and I think with solar, I think there's many individual names that look very, very appealing. Very, very similar with the clean energy space as well. I'm viewing this as a triangle pattern, and I think if we can break out above that, and again, clean energy comes onto the radar. We've got consumer discretionary very, very close to all-time highs, and of course, mobile payments, ETFs. Now, one thing to say is we have big earnings coming up next week, I think, for both MasterCard and Visa. So I think, depending on what happens there, that will tell us whether we break out. And if that's the case, then as we can see here, there's some holdings there that are probably quite appealing. And of course, I think semiconductors make a lot of sense, provided we're above this level. I did post this chart out to social media during the week, just saying, be careful. I think if semiconductors were to break below these levels, then that's likely a problem for the broader market as a whole. But the levels are holding firm at the moment, and hopefully we go in and break out to all-time highs there. So that's the broader market. Now, I've got around 20 individual stocks that I think you should add to your watch list for the forthcoming week or two. As I said at the start, be very, very careful regarding earnings. You do need to have some kind of process in place, in my opinion, for holding through earnings. I personally like to have at least 10% profit in the individual stock in order to hold through earnings. It just kind of protects the downside, for those 15-20% gap down that you can oftentimes get, which is obviously super stressful. And but I find that having that kind of rule set does help to kind of mitigate the risk there. But I think for applied materials, I think my thesis is still there. I think we've got a 175 target. We've had a massive breakout here now. I owned this stock. I am no longer in the stock. The strength of this market pullback shaking me out. But as we can see, the trailing stop has never been hit. So it is still in an uptrend. And I think, this is one of those stocks that I could quite easily buy back next week. And I do have a 175 target on it. Disclosure with DR Horton. This is a stock that we recommended to our clients and members on this breakout here. It's obviously doing very, very well. The reason I'm highlighting it to social media this week is we're very, very close to breaking above $100. Now these psychological levels are very, very important. Oftentimes it's a signal, and it's a catalyst for momentum to come into the stock. So I think if DR Horton can break out above $100, then again, I think the thesis that I have remains intact, and we're looking at around 122. 13th century mathematics, Google, get asked about this all the time. We've had a monster breakout, and the path of least resistance is higher, and we do have a 2,895, 2,900 target on it, and the stock is continuing to motor higher. Trade desk, I like it above the 50-day simple moving average. Mgni, now this is a stock that has done very, very well, I'm sure, for many in the past. It's been consolidating, it's been doing a whole lot of nothing over the last couple of months, as you would expect with many of the small caps, etc., that have been beaten. But it's very, very interesting to me that these key levels in the market are continuing to be respected. Now, many of our clients and members have been buying this dip here and looking to eventually, take this much higher. I think there's an outlook with Mgni that's quite favourable, especially when I think you look at TTD. I think, from what I understand, quite similar kind of company profile. Obviously do very different things, but quite similar. We've got Amazon. Now, what does it mean for the broader market if Amazon can break out above these key levels? Now, Amazon has done nothing for 18 months. Now, I'm sure you've all heard me say the saying, the bigger the base, the higher in space. Amazon has never reached oversold conditions. Now, this tells me that it's just consolidating and getting primed for a move higher. Now, I think with something like Amazon, we've obviously got earnings coming up. I think there's probably a catalyst to be had there. But again, this is a stock that many of our clients and members bought as it dipped to these levels down here, and of course waiting patiently for another big breakout. And I think this is one of those names that could just absolutely rip, given the nature of the stock, and of course the fact that it's done nothing for a couple of years. Again, very, very similar kind of set up for Square. Now, if Square starts to turn up here, then that would tell me that, of course, if we've got the iPay ETF, if we've got the payment processing companies starting to make breakout, you would expect Square Inc. to go along for the ride. So it's going to be very, very interesting to see what happens here. It is a range bound stock at the moment. I'm sure it's frustrating many of you that are holding, but the technicals tell me that 280 is at a level of resistance. That's a problem, but if you can start to turn up higher here, then that's probably got the look of a cup and handle pattern. And some of you that like to front run breakouts, that one might be appealing. The big level here, in my opinion, for Exxon Mobil, we are pulling back to a level of resistance dating back to June 2020. I think if you're in Exxon, I think you need to be quite careful, technically, if it breaks below this level. Of course, if you're a fundamental, investor in, dollar cost average, etc., then, no problem, continue to do what, works for you. But I think, looking at the technicals, below this level is a problem, but to the other side, with support and resistance, we treat it as support until that level is broken. So, for those of you that are bullish on energy, you like the Exxon Mobils, etc., then this might be a logical buy opportunity. But again, where is your thesis incorrect? The thesis is probably incorrect if we start to break below these levels. Going back to the payment processing companies, Visa has put in a breakout this week. I think it would make a lot of sense to wait and see what the reaction is to earnings here. But of course, breaking out to all-time highs is not the sign of a bearish stock. It's a bullish stock. So I think with Visa, I think it makes a lot of sense to add it to the radar. I think Apple, disclosure, I obviously own the stock. I've disclosed this for the last couple of years, but I think, it does have the look of a base, and I think if we can get a breakout above this level, I think it probably goes to test all-time highs. And of course, I think most of us who have an allocation to Apple, which I'm assuming is most of us in some capacity, I think makes a lot of sense. I think we've been building the right side of the base, and I've been covering this for the last couple of months, and the thesis that I have is absolutely playing out, I should say. So again, we'll see what happens there. Now, for disclosure, this is a stock that we've recommended to our clients. We have earnings coming up. I think it's before the market open on Monday. So we are going to be visiting this stock post earnings, and we like it above 178. I think as long as UPS holds above 178, then I think you have to be bullish. That's a base that gone on for nearly a year. So I think UPS makes a lot of sense. Gap continues to run higher here. Don't get me started. I obviously, for me anyway, it's not the type of clothing that I like. It doesn't fit me very well, but certainly it's making and breaking out into new highs here. So I think you just stick with it. Hilton, disclosure, this is a stock that we've recommended to our clients and members this weekend, provided this chart, like above 130. United Airlines, for those of you that like to buy dips, going back to maybe the Exxon Mobil type of chart, I think these levels offer opportunity a lot of the time. The Mgni chart is probably a good comparison. So if you're one of those that like to buy based on technical support levels, I think there's probably a case to be made there. But again, you obviously have to be very, very aware that if airlines etc. start to break lower, then that's obviously a problem. But by and large, it looks like it's in a bit of a consolidation pattern. But when we have these consolidation patterns, I absolutely don't mind buying at the bottom and selling at the top. It's more of a kind of swing style trade. It's not a trend following type position where you want to be in the position for 3, 6, 9 months, because the stock is continuing to just trend higher. I'm not in the stock market for little $1 or $2 moves. I want to be in the market for these $20, $50, $200 moves, because I understand that that's where the bulk of capital returns come in. Now we also have Caterpillar. Now, for disclosure, this was recommended to our clients and members above $200. It's been moving nicely, and very, very close to breaking out above 238. But I would urge everybody that likes the industrial space to keep an eye on the individual sectors like XLI, the S&P Industrial Index, etc. Because a lot of the times, many of you will be looking and wondering why, maybe the market's going up but your stock's going down, and a lot of the time it's just down to your sector, the sector that it's aligned with. It's just hitting resistance, and people are just profit taking. That's just the way the market works. So XLI is pushing up against the level of resistance at the moment, and that's something to say. But I think if Caterpillar on an individual basis can break out above 238, then that's probably a bullish development. Nvidia, pullbacks in uptrends oftentimes offer opportunity. I think we've pulled back. I think you'd have to be very, very careful here. I mean, we can see what happened when it put in a failed breakout last time. Obviously pulled back and tested the bottom of the range. So I think provided that we're above these levels, and certainly above the 20-day simple moving average, then I think you can continue to be bullish on Nvidia. The problem would be if it moves back into this range, there could be a bit of short-term downside. But I like the stock a lot. With AMD, again, massive sideways range, but I am noting the 200-day simple moving average and a potential trend line, and if it can break out here, I think there's probably about 15-20% upside there with AMD. Starbucks, disclosure, I own the stock. I bought it when it pulled back to this trend line level, and it's been doing very, very well. Many of our clients and members are in as well. It's just continuing to trend higher. But what I would say is we have earnings coming up this week. It will be very, very interesting to see what happens and what the reaction is to earnings. I guess a lot of you maybe look at earnings and maybe don't understand that it's not about what the earnings essentially says. It's what the Wall Street reaction to earnings is, and of course we have no say in what happens there. So I think Starbucks will be very, very interesting come earnings. We've got Expedia here, bullish above 157. It's been consolidating for a few weeks now. Note this is a weekly chart, but it has broken out above a level dating back to July 2017. Probably plays into the reopening travel trade. I don't know about anyone else, but I think I'm certainly getting itchy feet. As somebody who's traveled to 50 odd countries, and travel is a big part of my life. I very much look forward to going and exploring and using Expedia, and I think those types of names are starting to look a little bit more appealing as vaccinations etc start to get rolled out across the world. I think certainly in the UK we're very, very close to reopening. Things are going very, very well, so I'm starting to get my life back. Abercrombie and Fitch, again bullish above $30. I've covered this for the last few social media analysis. I think massive trend line support, but we're very, very close and approaching our first target here around $45. Morgan Stanley, again, if we can get breakouts in stocks that are breaking out above bases dating back to 2000, then that's certainly a bullish development. Now note this is a monthly chart. I've had to condense the data just to make it presentable. It's obviously had a massive breakout back in November, which is when I first covered it, and it has been doing very, very well. It's close to reaching the profit target that we have in place for it. But again, for those of you that are maybe looking at the banks, Morgan Stanley, maybe you like safety, maybe you're trying to reduce the volatility in your portfolio, certainly something like Morgan Stanley might be appealing. Now the next couple of charts that I have are just going to demonstrate why I look for failed breakdowns in good stocks. Now Penn Gaming, as we know, has been chopping about sideways, doing a whole lot of nothing. Yes, it reached a high of around 140, 145. Since then, it's been pulling back. Now we have broken down below a significant level for me. Now this is where a lot of short sellers really get into difficulty, because you have this thesis where you've got a stock that's breaking down, so let's short it. It kind of makes sense to me. But what the other side of it is well, with failed breakdowns we can get fast moves going in the opposite direction. Now this is a chart that we provided again clients and members when we put in a failed breakdown here in Home Depot. Of course, hindsight tells us that it was great. It was obviously a really good position, but when we observe these failed breakdowns, we get fast moves going the opposite direction. Obviously, C Limited is doing very, very well. Recent pullbacks and uptrends offer opportunity. Now I won't get into the parameters of what my stop loss trailing stop settings are. It's quite complex, and I think a lot of you just won't have access to this particular trailing stop, but we have a breakout. I think this is a significant level for C Limited. I think there's many smart people that I think have price targets on it that are quite high, and certainly as someone who has many members from the Asia area, Singapore, Hong Kong, etc. You know, they're very, very high on Sea Limited as a company. Again, we never reached oversold conditions, and that tells me that the stock is continuing to be in an uptrend, and I like it a lot on this breakout. I think if there's continuation on the market next week, then I think Sea Limited has the potential to be a high momentum move. Going back to a stock that, you know, if you like support levels, I think Disney makes a lot of sense there. eBay, like above $66. Yeti, disclosure, this was recommended to our clients and members when we had this breakout here. It's been moving very, very well. It's been consolidating, you know, flag pattern, triangle pattern, well, whatever you want to call it. It does look like it's potentially breaking out again. Another disclosure, Plug Power has posted and recommended to our clients this weekend, if it can break out above the 200-day simple moving average, there's every case to be had that Plug Power is potentially putting in a bottom. Now, that comes back to I guess the small caps, the clean energy space that could potentially be ready to move higher. So I think, you know, for those of you that did very well on Plug Power last year, like myself and, you know, many of our clients and members, I think Plug Power would make a lot of sense. Jumia, disclosure, I bought the stock, I think it was on Thursday. 200 SMA support, that's the daily time frame. This is the weekly chart, which I think shows it a lot clearer. For me, I think it's a case of support. I think former resistance turning into support. We call that polarity within the technical world. We learn it, you know, technical analysis kindergarten, and it looks to be finding a bottom. Hopefully my thesis is correct, because I have obviously my money on the line. And we're going to finish it up with Salesforce. I think we've got a very clear channel here. We've broken above the 200-day simple moving average, and we're looking for a breakout in this level here. Now, if you got some value from that, please do, as I said before, subscribe to our channel, give it a like, give it a thumbs up, share it, all the good stuff. It all helps to kind of get the word out there. If you are somebody that perhaps does struggle a little bit, maybe you don't understand technical analysis, maybe you would like to add it to your process, feel free to go and check out our website at honeystocks.com. We provide our research to both professional and retail traders, investors, whatever you call yourself. But we've got an annual membership, and what our membership provides is we provide a weekend analysis very, very similar to what you've just watched every week. We provide a halftime analysis every single Wednesday, which is a bite-sized chunk of what you've just watched. We provide ideas. I provide one-on-one charting support, provide access to a network of traders and investors from all over the world. And I think probably the one thing that, you know, if you were to ask and sit down and have a beer with, you know, many of our members, they'd probably all say that the technical analysis program, for those that were looking to learn technical analysis, has been absolutely invaluable. It's well thought of, and of course it's all included with your membership, but feel free to go and check that out. But what I will do is just show you what I think, you know, everybody wants is probably trade ideas, investment ideas, but I'm very, very open and very transparent with what I provide our clients and members, as well as the approach that I have to the market. I log every single idea on our website. This is a recent one that went out for DR Horton. I did disclose this during the presentation. It broke out. We're pushing up obviously above $100. That's a recent one. Yeti, it went out 10 days ago or so. Again, it is motoring. We're up at $88, $89. Mgni was a massive winner last year, and Plug Power, as I'm sure many of you have done pretty well on. This was recommended above 1450, and that thing just took off. United States Steel, again, another one that was nearly 100%, I think, on that one. But feel free to go and check out our website. As I said, I log every single one of them. I have a quality over quantity approach, so I'm not shouting out trade alerts every 5 minutes. We only provide one, maybe two per week. It has to be a quality over quantity approach, so feel free to go and check out, and I guess see if the types of stocks that we like to recommend are the types of stocks that you like to buy. But go and check out the website, do your due diligence, and see if it's a good fit for you. Just to show you some of the successes. This is one of our members last year. Now, obviously, last year, let's call it what it was. It's a one-off that I don't think many will be repeating anytime soon. But certainly, for those that trade stock and options, annual returns of this number are just incredible. So this is Vince. This is his second year that he's been with me. Second year, over 100%. Now, Vince trades stocks and options. Of course, you need to understand options. It's not an area of the market that I would suggest ever going in and hoping for the best. Vince is very well educated on options, and this is one of our members. He started off with 40,000, taking it to 96, and this was his most recent post, up to 160. So that's what we do. So if you're somebody that's maybe looking to move away from day trading, maybe the penny's dropped and you've realized that it's too inconsistent and it doesn't really work, maybe you just want to learn technical analysis, maybe you're too busy to filter through thousands of stocks or to find where the relative outperformance is likely to come from. Maybe you just want to be part of a group. We only charge $500 annually for a membership. I am thinking about potentially increasing this to 300. I think those of you that have followed me for quite a while will know that I've got a very high membership retention rate, and that's why I only do one social media video every single month. It's our membership limit is always pretty much full, but I am looking to potentially increase that to 300 in the coming months, so keep an eye on that. But yeah, if it looks appealing, you can go and sign up on our website. But thanks very much for watching, and long may the markets continue in their uptrend. Appreciate your time. Thank you.